All right, well, good morning, everyone. I'd like to welcome everybody to our webinar this morning on PPP forgiveness and planning opportunities. On behalf of Corrigan Krause, we're excited to educate, answer some questions, and hopefully give you some good advice to navigate the PPP forgiveness process and see what other planning opportunities are out there. I know some are being admitted as we're talking here, so I appreciate everybody that's jumped on already and those that will be joining us. For those of you who aren't on the call that haven't met yet, I'm Aaron Apathy. I'm an assurance services director at Corrigan Krause. So focus in on consulting services, financial reporting, and other strategic planning opportunities for our business owners and individuals. The PPP program has been a unique item, along with many other things in 2020. It's been a response by SBA and our government to provide funding to businesses throughout the country. So we've saw $349 billion go into this program back in April, $320 billion more a month later. And it's been something that's been top of mind for advisors and business owners throughout the year. So we're hoping to shed a little bit more light as everybody's going through the forgiveness process, as you're wrapping up your year ends and trying to land the best spot possible from a cash flow and tax planning perspective. So, throughout 2020, our response has been to develop a coronavirus crisis team to be nimble enough to be responsive to the consulting and planning opportunities for our clients, non-clients, and business associates. So we developed early on a COVID landing page on our website that's been updated routinely with resources. And specifically have developed our coronavirus crisis team so that these individuals, myself, Tommy, Derek, Eric Dorncott, all on here, along with others, have been dedicated our time and effort to really be responsive to everything that's changing in this area. So we're going to provide an update on, the forgiveness process specifically, talk about tax deductibility, the gray areas, and some other unique items in this program. We want this to be interactive, so as much as possible, we'll encourage you to utilize the chat feature. At this time, I'd like to have each panelist kind of quickly introduce themselves, starting with Eric Dorncott.
Thanks, Aaron. My name's Eric Dorncott. I'm a tax director here at Corrigan Krause. I've been in public practice for a little bit over 20 years. I work mainly with our pass-through entities and their related shareholders. I specialize in tax planning, specialty transactions, such as mergers and acquisitions. And I do work very closely with the shareholders of all our pass-through entities. So thank you, Aaron. And with that, I'll move it on to Tommy.
Thanks. Hi, my name's Tommy Sustar. I'm a senior manager in our assurance services department. I've been with Corrigan Krause since mid-March of this year. Prior to that, I have 14 years of public accounting experience working at the Big Four and another top 10 firm. As Aaron mentioned, we started our coronavirus team. I've been a member of that team since April, helping with the application process for the PPP loans, helping with compliance for loans, and then ultimately helping companies now apply for forgiveness.
Good morning, everyone. I'm Derek Solomon. I'm one of the co-leaders of the Corrigan Krause Consulting Department, and I focus primarily on business valuations, succession planning, business acquisitions and sales, and related consulting services. I've been with Corrigan Krause for about 4 years, and Tommy didn't say that he joined us. I believe it was right as the crisis was unfolding in early March and got thrown right into the fire of what Corrigan Krause is all about. So he's been an integral part of our team as well. To quickly add on to what Aaron indicated at the outset, the loan and forgiveness aspects of the PPP program have been, as you've probably heard in the news over the last 8 months, they've been continually evolving and often confusing and potentially contradicting. So we're happy to bring some clarity to the process for you today. So I'll turn it back to Aaron now.
Yeah, thanks. Thanks all to all of our panelists. Would like to turn it over to Megan Hiles as well. Megan is our business development and marketing manager. She's helped put this together this morning, and will give a quick introduction and housekeeping items as well.
Sure, thanks, Aaron. As Aaron mentioned, I'm the Marketing and Business Development Manager at Corrigan Krause. I've been at the firm for about 3.5 years now, so just thanks again to everybody joining us today. One quick housekeeping item, we do want this discussion to be interactive, so I'm going to be monitoring the chat window. If you have any questions throughout the conversation, feel free to put it through the chat, and I will interject and make sure that those questions get to our speakers. So again, thanks for joining us today.
Thank you again, Megan. One of the first things in this process is understanding, the application process, and specifically what application forms you're eligible to use. So, Tommy, what application forms are out there, and who qualifies to use what forms?
Sure. So there's 3 application forms that are currently out there for borrowers to apply for forgiveness with, based on the eligibility criteria that you would meet for those different forms. The first form is the 3508 standard form, which it's for any loans that were greater than $2 million. And then if you had a loan below $2 million and you had a reduction in your full-time equivalents or a salary reduction, then you're required to also use the 3508 standard form. There's also the easy form, which they came out with this summer, that is a 3-page form that is, if your loan is below $2 million and you didn't have any FTE reductions or salary reductions, you're allowed to use the easy form. It's also, if you're self-employed, you're allowed to use it. And then if you had reductions or salary reductions because of government regulations, whether it be the CDC or local government or state government that forced you to shut down, you're still allowed to use that easy form because you weren't allowed to operate at pre-COVID levels. The last form that came out with just in October was the 3508S form. So this form is 1 page and it requires some certification from the borrowers. And the biggest thing this did is for borrowers that are below $50,000, you are exempt from calculating any FTE reductions or salary reductions. All you have to do is put what you have for your FTEs, and they're not going to ask you to substantiate it if you maintain those throughout the period. You're still required to supply information that supports the payroll costs that you use and the allowable non-payroll costs. So that's still part of it, but you're no longer having to do the FTE or the salary reduction.
Yeah, it sounds like the S form, especially for a lot of the smaller business, has been, something that really streamlined the process. Tommy, in terms of the application forms, is it all in paper format, or do all clients have to pre-fill these forms and submit them electronically, or is there a different process with the banks?
So you don't necessarily have to fill it out on paper before you do it. It's a good practice to let you know what you're doing overall and what you're going to ultimately expect once you do the portal. But banks are designed where they will create your draft application once you go in the portal and ultimately do that. So it's a good practice to help you understand what your forgiveness outcome will be, but the portal will walk you through step by step ultimately.
Thanks, Tommy. Yeah, and again, with business owners, understanding which application form you can use is probably step 1 in the process, because that can help streamline the documentation support and information that you really need to start pulling together. Whether you start your process or not, this is really kind of step 1 in the process in understanding, how you should really proceed and move forward. So thank you, Tommy, for giving some clarity on which application forms are out there. With the PPP overall, there's been just a ton of uncertainty. What we know today, what we knew in April is different than what we know, today, and what we know today might be different than tomorrow. But there's definitely some unique planning opportunities as we've been advising clients along the way. So, Derek, would love for you to talk about the different planning areas that we've been addressing in the forgiveness process.
Sure. Thanks, Aaron. Initially, there are some important planning areas related to what the what the SBA called the safe harbors, both for salary reduction, meaning businesses that were forced to reduce salaries or wages to employees, and or employee count, or what is commonly called the FTE, or full-time equivalent, safe harbor that is available as well. Both of these safe harbors indicate that if businesses restore their salaries and or FTE counts by December 31st, then any potential reduction in loan forgiveness becomes irrelevant, because essentially the salary levels and or the employee levels have been restored to what they often call the pre-pandemic levels. Now, there are some specific details in the instructions, and as Tommy indicated, there's several different forgiveness application forms out there. Specific to the full-time equivalent safe harbor, which really is the most important issue that a lot of businesses are dealing with now. The instructions to the 3508 form, the main form for loan forgiveness, specify that if a business had a reduction in employee count, or FTEs, between February 15th and April 26th, but that those FTE counts after that reduction are restored by December 31st, then the safe harbor is met. And to get a little more specific, the benchmark is to restore the FTE levels by December 31st back to where they were as of the February 15th pay period. So there's some specific lines in the sand, so to speak, that the SBA instructions indicate that businesses need to follow to meet these safe harbors. Now, there's an important issue as well, in that there is some flexibility in maintain or restoring your FTE levels, because the instructions allow for certain what they call Fte reduction exceptions that allow a business, if they lost people for specific reasons that wasn't the business's fault, to exclude that reduction from their FTE reduction. Essentially, that those won't count against you. And those are primarily in the area of employees that were terminated for cause, or left voluntarily on their own, or if there was a good faith written offer to rehire an individual, but the individual refused, either because of compensation issues, or, as many people have heard, that there were a lot of businesses facing the issue that employees who were left temporarily were making more or just as much on unemployment than they were previously, and they didn't want to take the risk of coming back to work. So if the employer made a good faith written offer to rehire those individuals and it was refused, then again, that won't count against you. That's one of the Fte reduction exceptions. So it's important to, as you plan for this process, to have the documentation available as you go along and through the process, maintaining the offers, the supporting details related to employees who left for cause, employees who voluntarily resigned, and being able to substantiate those if it's ever asked, particularly for businesses that are have loans below $2 million that won't have a automatic audit of their records. There's another important tool that businesses can use to be able to track this. If you haven't already experienced this through your payroll providers or been alerted by your payroll providers, there are very good reports that we've seen and used that at least several of the larger payroll companies provide, such as most notably the ones I've seen are Paychex or ADP, where they will provide or give you the tool to download payroll reports and FTE in details, most notably whether they were full-time employees or part-time employees, to be able to establish the FTE counts prior to the beginning of the pandemic and currently, or at any period in between. So those payroll reports can be very important and very a huge time saver for businesses to be able to access that information from their providers. Aaron, you want to keep going on these topics, or do you
Yeah, well, I think you've hit,
interject with
you know,
questions?
2 points there, Derek. You know, the FTE safe harbor that's available, you know, with 12/31 quickly approaching, you know, I think that's a tremendous opportunity for those to explore their situations, see if there is the FTE reduction, and, you know, if there's opportunity in any way to bring back employees on a temporary basis, you might have some opportunity to pay some wages, but then, you know, get more forgiveness, you know, so land in a better spot by paying some wages in the short term. Any thoughts on that process in any way?
Yeah, well, particularly related to wages, keep in mind, businesses need to keep in mind that there are limits on the amount that can be utilized as payroll costs during the business's covered period. I think that's an important benchmark to start from. For owners and employees, or I'm sorry, owners-employees, as the IRS calls it, that limitation is based on $100,000 of compensation. And based on the proration that the SBA initially did of that $100,000 cap, the maximum amount that can be included for owner-employees is 2.5 months of pay, which works out to about $20,000 if you do the proration. Now, an important consideration there for some businesses is that the SBA defines a owner-employee as an individual with 5% or more ownership. So anyone below 5% ownership is deemed to be a typical employee, and that's actually a higher limit, because once the 8-week covered period, which was originally used by the SBA, got extended to 24 weeks, then that proration for quote unquote regular employees was increased. If you take the factor 24 weeks out of 52 in a year, that proration of the $100,000 cap for non-owner employees became about $46,000 during a 24-week covered period. So those are some important details related to compensation and payroll costs to keep in mind as the forgiveness application details are being gathered. Now, Aaron, were you asking as well about the issue of replacing people by 12/31 for that safe harbor?
Yeah, correct.
Okay, yeah, that's an area that there is some flexibility, and we've got a few gray areas that we're going to cover soon. With every planning opportunity and every rule that is there is potentially a way to capitalize on that rule. Some businesses are looking at bringing in employees to restore their headcount by December 31st that may not be permanent employees in the future. And we've seen nothing that would indicate that the IRS or the SBA would come in and look at whether those replacement employees who restored the FTE count were still there next July or at some point in the future. But the key is to the extent that it can be done, to restore that employee count by December 31st. Another area, lastly, that I think I'll cover at this point is that beyond the payroll cost issues for businesses, there's the issues of non-payroll costs that can be included for loan forgiveness, most notably rent, mortgage interest, or utilities. There was a rule that came out that specific to rent and mortgage interest that really causes a reduction for a lot of businesses in the amount of rent that they can claim if the lease arrangement they have is with a related party. For instance, if a business has owner also owning the building that the business rents from the owner landlord, there are restrictions there, which, and this rule came out in August, that rent that's included in non-payroll costs is limited to your mortgage interest. And this is another, quite frankly, confusing and issue that really isn't fair. If you think about an issue where, an owner owns the building, doesn't have a mortgage because they paid off the mortgage based on profitability and otherwise, yet their rent is fair market rates. The SBA says you can't include any of that fair market rent because there's no mortgage interest being paid by the related party landlord. That is a perfect example of some of these PPP rules that make us scratch our head throughout the process, because it's just one of those that isn't quite fair.
Thanks, Derek. As we've been helping out clients in this area moving forward with forgiveness, especially with the change to the 24-week period, we've noticed that a lot do qualify or can get ultimate forgiveness with just payroll costs. And so utilizing just the payroll costs and, pulling easily accessible payroll reports from a third-party payroll provider has made the process relatively efficient. And so we've ignored with clients those other costs as long as they've achieved forgiveness with payroll and have just really reported payroll costs only in those situations. So something to be aware of. And again, it's a case-by-case basis. Everybody has a different unique situation with their business and the application process, but utilizing those payroll costs as much as possible with the reporting out there can make this process much easier. So,
right, Aaron, I guess we want to add on to there is the rule related to at least 60% being payroll costs, which some borrowers might remember got changed as the process evolved back in the spring. Originally, it was at least 75% needed to be spent on payroll, but then when the act went through Congress in June, that got reduced to at least 60% to make it. And the intent of these forgiveness rules has really been, and people in Congress were saying this back in the spring, that they've been making the effort to try to give borrowers complete or at least nearly complete forgiveness on their loan. And that has been, even though some of these rules are restrictive and confusing, that's really been I think the spirit of the program all along, is to help borrowers achieve complete forgiveness.
thanks, Derek.
Sure.
What's top of mind related to all this is, the tax impact of the PPP loan. So we'd love to hear Eric's perspective from our tax department on deductibility or non-deductibility of the PPP.
Thanks, Aaron. When the PPP program was rolled out in April, it was clear from all levels of the government that the intent was for this income to be tax-free. And it has been. The income itself is tax-free. But what they came out over the summer and said, and the IRS came out and said this, is that yes, your income is tax-free, but expenses you paid with that income, if that income is forgiven, are not deductible. So that was probably late August, early September when the IRS came out and said that. So if you get $1 million loan and you pay $1 million of payroll, you do not get to, and your loan is fully forgiven, you do not get to deduct the expenses of the $1 million of payroll that you paid with the loan. So then there was some thoughts about, well, would it matter when I apply for forgiveness? Because if the end of the year comes around and my loan hasn't been forgiven by the end of the year, do I pick up those lost deductions in a future year, meaning in the year that the loan is forgiven? So at the beginning of November, maybe even the middle of November, the IRS came out and clarified that and said, if you anticipate your loan to be forgiven, the expenses are not deductible if at the point you expect it to not be forgiven. So if here in December you expect your loan not to be forgiven, it will not matter if you apply now or later in early 2021. The expenses you paid with those funds are not deductible in the year you paid for those funds. There is still a lot of people holding out some hope that they will make these deductions deductible. I don't think the chances of that are very good. It would require an act of Congress for that to happen. I know the AICPA, which is the American Institute of Certified Public Accountants, is lobbying very hard for this. I don't think you're going to see that pass, though, but that's just my gut feeling. I would intend that your deductions that you paid for in 2020 are not deductible in 2020, regardless of when you apply for forgiveness. And I know there was a quick question. I want to be able to read it, and then I will go over that. I applied for forgiveness in September. It would take the SBA 90 days to approve it. My application was for about 75% of the entirety of the loan. My question is around the tax implications and how I should be booking these items before the end of the year, assuming I will be given the forgiveness. So for tax purposes, I would not pick up the 75% of the loan as income. It's non-taxable income, but I would take the 75% of that loan and not deduct, let's presume that 100% of your forgiveness was used on wages. I would not deduct 75% of your wages that you paid with that loan. And I would deduct 25%. Since that is your belief that 75% of the loan is forgiven or will be forgiven and you expect it to be forgiven. So I think you have to look at it at the end of the year and say, what do I expect? What do I reasonably expect to be forgiven? And that is the amount of deductions that you should not be deducting in payroll. I think I covered all those questions. So there will be a little bit more coming forward, but.
And to give clarity a little bit on, from, maintaining books and, adjusting your financial statements, whether internally or, you're providing to third parties, is your financial statements, if you are applying for forgiveness now and receive forgiveness before the end of the year, you'll be removing the loan from the books. If it's fully forgiven, your loan will go to zero, and you'll be booking to other income the amount that was forgiven. So if you had a $200,000 loan, you got full forgiveness, the loan goes to zero, and you have other income for $200,000. In addition to that, if you ultimately are not, if you submit for forgiveness now, but reasonably expect that you're going to be forgiven at year end, the proper accounting is to book this as other income as well this year. So removing the loan from your books and booking other income at the end of the year. So really in all situations, if you're expecting to get forgiveness at year end, as of 12/31, that loan should be going away on your books and you have other income to that extent. So, obviously, as Eric said, there's, the thought process in April is different than the thought process now with tax deductibility. And with this whole program, there's been just a lot of gray areas to cover. I'd like to ask a few questions on some of the gray areas that, continue to be out there. One specifically is really the timing of things, obviously timing with year end and timing with a formal deadline, when you really have to apply and when the process really gets completed. So Derek, any update on the deadline related to this?
No, it's a gray area. There's no deadline. There was some concern a few months ago that borrowers were thinking they had to do something by October 31st because the original forgiveness applications said expires this October 31st, but clarification was given that wasn't a deadline. And ultimately, the main deadline or main time frame to keep in mind is that loan payments, if there are any loan payments that would be required if complete forgiveness is not obtained, would begin 10 months after the end of the covered period. So for most businesses who were getting their PPP funding in the April-May timeframe, the end of the 24-week covered period was expiring in the October timeframe. So if you push that forward 10 months, then we're looking at next August. So the indications from the SBA, and there's been some nice clarification by the AICPA as well, has indicated that the forgiveness application just needs to be in prior to making loan payments. So really businesses can take until next summer to get all their information in order, to hopefully obtain safe harbors if needed, and provide the documentation through their banks to be able to get that forgiveness process completed by next summer. So there's no deadlines that have been established other than that 10-month time frame, which is the point in which payments would be made. And I noticed in the chat that, let me scroll back to this for a sec. Mr. McNamara, William McNamara, had posted an email from PNC, which essentially, as I'm reading, it says that same thing, that even if you haven't applied for forgiveness, no payments are due until the end of your deferral period, which is 10 months after the end of the 24-week covered period. So I'm continuing to read this through. The question is, don't I have to submit through PNC and they are not allowing yet? So the answer, yes, Mr. McNamara, is that is correct, that you have to go through your bank. You're not going to go directly to the SBA. It will be through your loan provider. And some banks have been getting online with their forgiveness portals, as I think Tommy said earlier, quicker than others. Some of the larger banks we've seen weren't moving as quickly, such as Huntington, for example, which is one of the largest SBA lenders in the state, had a vast majority of PPP loans, and they took a while to get their forgiveness portal up and running. So that's the big picture related to timing, is that there's no rush. The businesses can be strategic and methodical in getting their information together and hopefully having all the documentation to get complete forgiveness, and you theoretically have until next summer to do so, unless they change the rules on us again. Aaron, back to you.
Thanks, Derek. Another item, that continues to be a gray area and confusion for some clients is the affiliation rules. And so those that may have multiple businesses, and how it impacts which application form they potentially could use. There's some confusion there. So we'd love to have an update on that. And Tommy, I know you have some experience in that specifically.
Sure. So the affiliation rules, they allow different companies to receive multiple PPP loans for each different affiliate. So you could have had a loan that was $500,000, and then your other affiliates could have also gotten loans of similar size overall, and the SBA was okay with that in the initial application process. And what they decided was, in the forgiveness process, is if you collectively with your affiliates, if you have loans in the aggregate greater than $2 million, you're required to use the standard form. And when you go through the portal, they're going to make you answer this question. Even if you initially think you qualify for the easy form, they're going to ask you a question, or with your affiliates, do you exceed $2 million? And then the next question is, what's considered an affiliate according to the SBA, since they have special rules for everything. So affiliation based on ownership is one of the first things. And that's it. If you control over 50% of another company, you're considered an affiliate. And then if you have an affiliation based on stock options or convertible securities, that's another affiliate. Also, affiliation based on common management. So if you're the CEO or president of one company and then you're part of management of another company, that's considered to be an affiliate as well. And the last is affiliation based on identity of interest. And what this is close relatives being in management of multiple companies. The example I've seen is if you have a husband and a wife and they control each of the different companies, and maybe just for structure reasons, that's how it is. The SBA considers those ultimately to be affiliates. And so if you trigger any of the four of these, and if in the aggregate your loans are over $2 million, you'd have to use that standard form. It's not going to change your ultimate forgiveness process, just means you got to provide a little more documentation overall.
Thanks, Tommy, for giving some insight there. One other gray area that I'd like to touch on quickly before we catch up on some questions here, is the random audit, the concern on that. It seems to be, those with over $2 million are subject to audit. Loans over $2 million are subject to automatic audit requirement. But really, some clients are concerned about the random audit and what that could look like. So would love to hear input from maybe both Derek and Tommy on what that random audit may look like, starting with Derek.
Okay. Yeah. This kind of relates to what I've already talked about in terms of documentation of your employee counts and any type of substantiation of employees that were excluded. That's the type of thing that may not be required specifically as when the forgiveness application is done, but if there's a random audit pulled, then it's that type of documentation that businesses should have maintained and be prepared to provide to substantiate those Fte reduction exceptions that I talked about earlier, and any other information related to the obtaining or meeting the safe harbor requirements that I talked about earlier. Tommy, I think you've gone through some issues potentially related to some of the larger companies that will get an audit. So is there anything you want to add from that perspective?
Sure. So I think from the audit perspective, it's going to be a compliance type audit. It's different than the financial statement audits that some companies may go through. And what it's going to entail is compliance up front. So you applied for your loan. Did you get the right amount that you were supposed to initially? I would say sometimes banks were approving anything that you sent them. So, making sure that you got the right amount up front. I've heard during the forgiveness process that banks are supposed to be checking this to make sure you got the right amount that you applied for. And then how'd you use those costs, and can you support ultimately those costs? And then the thing to consider is technically, I think it's 5-6 years that the SBA is allowed to come back and perform these audits. It's at least multiple years that you technically could be subjected to a random audit. And even for the companies over $2 million. So we need to maintain these documents to make sure that we're ready. And I don't think it's going to be an issue, but it's just making sure you have the documents to prove you used for the allowable costs. And for the ones over $2 million, you're also going to have to, substantiate your economic necessity for the loan up front.
Thank you, Tommy. Just answering a few questions that are out there. One business indicated they had some employees voluntarily leave their company back in June and August after receiving their PPP loan, but have not replaced those positions. So they're questioning if they're at risk of not receiving full forgiveness because of this. So Derek mentioned earlier on, Fte exceptions. And so if somebody voluntarily leaves your organization, your business, that does not count against you negatively. So a voluntary leave from the company does not negatively impact your Fte count or your loan. So,
Aaron, I would just add one thing there that they have to be able to substantiate that, right? So the more written documentation you can provide ultimately would help you. If you extended them an email or an offer or asked them to come back or something, that would be ideal and you're going to have no questions. But if you didn't, what I've been having some clients do is write up a memo that explains this person left, this is why they left, they didn't come back. And as much documentation as we can have, you have like a termination from HR perspective, and you can include that as well, is really just make the review on the bank as easy as possible to show, because we know some people didn't come back because of unemployment as well.
Thanks, Tommy. Somebody has their loan paperwork says 8 weeks. Are we still allowed to use a 24-week period to calculate filing timing? So the application form may be different than your original agreement there, but the application form gives you the option to do the 8 weeks or 24 weeks. So you will have the ability to choose what's best and most advantageous for you on the application form. So somebody ask the question, do you suggest I fill out this application with my bank solo, or do you suggest coordination with you? So that's something I'll touch on at the end of how we've been helping clients out. We at a minimum are looking to review all applications for all of our clients, non-clients as well. We're helping out. So, we're helping out to review and they're submitting, or we're going through the whole process in terms of reviewing, gathering their information, creating the packet, and then filing with them with their lender. So it's a one-shot attempt at your application, your forgiveness application. So we would want you to help out and lean on advisors as much as possible. Eric, this is probably a question for you here that I would love to hear your input. You talked about timing of non-deductibility, but Huntington Bank specifically is not accepting PPP forgiveness applications for loans under $150,000. I think they're holding out on automatic forgiveness for $150K. But the attendee wants to know is if they do not apply for forgiveness, the loan will stay on the books, but would they then be required to, pick it up as taxable income this year?
So no, the loan itself won't be taxable income, but as the IRS has stated, if you anticipate the loan being forgiven, the deductions that you took in 2020 are not deductible, regardless if you've received forgiveness or submitted a forgiveness application to ask for forgiveness. So if you anticipate you will be forgiven, they're not deductible. Now, there are ways, if something happens where the loan is not forgiven, there's obviously amendments that can happen to correct that. But again, if you anticipate 100% forgiveness, I would not deduct the expenses in 2020, regardless if you have applied for forgiveness.
Self-employed business owner wants to know if they do not use a payroll company, how do they really calculate their forgiveness on their application form? So, Tommy, those self-employed individuals, how do they calculate their forgiveness payroll costs?
So it's technically for self-employed owner replacement costs is what it's ultimately doing. And so what you're going to provide and for any payroll owner replacement costs is evidence of proof of payment for that. And then any other non-payroll costs that you would have included, such as mortgage or rent, other things that were on your Schedule C to begin with, would also be included in your ultimate forgiveness packet. And then for anyone in general, I would say that doesn't have a formal payroll provider and is doing it through a spreadsheet, any tax forms you can include to substantiate that the payment ultimately, and then as well would help you with this case to substantiate your forgiveness process. And the forms, when you go through the portal, will sort of walk you through what's required from that level.
Let me add that I noticed that question from my friend Andrea earlier, and I looked back at the rules from what's called the interim final rules that the SBA was issuing with the Treasury back in the spring. And as Tommy just said, the issue for Schedule C's self-employed individuals is called, quote, owner compensation replacement, which for forgiveness is calculated based on the 2019 net profit shown on the Schedule C. So I think that's going to be an important piece of the documentation, is providing the 2019 Schedule C that was the basis for the calculation of the loan in the first place. Now, Tommy, I think I asked you this question a couple of days ago. You haven't actually had any of these types of Schedule C loans go through the forgiveness process yet, right?
No, I haven't processed any Schedule C. I've answered some questions for clients, but I had not submitted any Schedule Cs.
Right, because technically Schedule Cs don't have payroll to provide as documentation, so we would need to provide the Schedule C from 2019, which was the document that the bank had in the first place to substantiate the loan.
Question on documentation for that FTE exception. Will a letter of resignation suffice as documentation? I would agree that that is a voluntary leave. You know, somebody signing a resignation letter is saying that they do not want to work for your company anymore. So that would be proper documentation to maintain and not count negatively against you. So if we know that the FTE count on 12/31/20 is a good level and helps us to achieve forgiveness, do I, as a business owner, still need to save documentation for payroll for the 24-week period? You know, so the payroll records need to be maintained and provided as part of your application process to substantiate your payroll costs. So regardless of where the FTE counts are at, you know, to substantiate what you put down for payroll costs is needed. So you'll have to have those payroll records and turn them in to substantiate the payroll costs you're putting on your application. So, you know, we're talking a lot about the application process, and every lender is a little bit different in terms of the experience that I've had, but we'd love, Tommy, to hear your perspective on the bank process and developments that are going on with PPP.
Sure. So we've done applications for various banks, both locally and nationally, as far as helping people apply for PPP forgiveness. Some of them are a lot more user-friendly than others. Although I would say PNC has been slow to send out the applications to people. I think they have a very user-friendly one. So some of them will walk you through step-by-step of how to complete the application. They're going to ask you, what are your payroll costs? What was your owner compensation? What did you have for non-payroll costs, mortgage, et cetera? All those costs that should match your draft application. And so you can compare it back and forth. And then certain banks will have it that you can't go forward past a certain step. So if you put $100,000 in for payroll costs, you have to upload the documents that required for payroll costs. So your payroll registers, maybe W-2s, what you paid your owners, et cetera. And then others will have you go through the entire application and then it's upload everything. And it's a little more vague as to what I mean, the rules are still the same, but they don't go through step by step saying what you have to upload. You should still upload your payroll cost support and your non-payroll costs. I would also say, depending on the banks, you know, some of them are using third-party service providers to review your applications, and they may be requiring more documentation. The laws are the laws, but some banks aren't making you substantiate whether a utility was in service prior to February or certain other documents. So you will see some back and forth with the banks is what I've been telling clients is, so we may submit and it may be a couple weeks before we hear from someone, but it usually goes pretty quick. So you'll get a question back from the bank, a request for files with a link to upload those. And if you upload what they're looking for, whether it be more tax information or other support for your utility or something like that, they'll usually process it fairly quickly. So you know, it's ideal if it goes right through, but don't be surprised if there's a little back and forth with the bank. And I would say that's very normal for the loans that are, you know, above the $50,000 threshold.
Thanks, Tommy. Yeah, and again, you know, if you have not reached out to your lender yet, you know, I would reach out now. You know, understand their process, understand their timing, and you know, and start the process as much as possible. So, you know, at this point, we'd like to touch on a few quick other items that are out there. Eric would, you know, one planning item is or item that's coming up a lot is the FFCRA. So I know you know what that stands for, but would love to hear a little bit about that program and what's going on with that.
Sure. The FFCRA is the Families First Coronavirus Response Act. And basically what it was is if you had under 500 employees, you were required to give employees up to 2 weeks of PTO basically for coronavirus related issues, meaning they were caring for someone, they had to quarantine, something like that. If you had anyone that took this leave, took this PTO underneath this act, the key takeaway here is you cannot double dip on those wages. So you cannot say use those wages to get the credit at the end of the year from the IRS and use those wages to have forgiveness on your PPP loan. So just be careful that if you had someone take leave due to this act in that period where you're looking for PPP, don't use them for your PPP if you're going to then ask for the credit at the end of the year. You can, hopefully you have enough payroll where you can exclude those wages from the PPP application and still hit your payroll if you do the 24 weeks. So that's the key takeaway that I want you to understand is don't double dip on those wages.
Any impact, you kind of talked about the double dip there. Another program out there was the EIDL loan. So, there was an advanced component that was out there, that some business owners received, but others received the EIDL grant and the EIDL loan, and there's also Ohio grant. So how does that impact the PPP, Eric? Any impact at all?
So if you received an EIDL grant, let's call it $10,000. A lot of people were getting that amount. And you received the PPP, the $10,000 of the EIDL will be a grant, but then $10,000 of your PPP won't be forgiven. So to the question that's out there, you would have a $10,000 loan on your books to pay back over time. And I don't know, Tommy, I haven't applied for a forgiveness with the EIDL. Is there a line on the application that if you had EIDL?
Yeah, I was gonna mention, so the way it works, and it kind of throws people off, is at the top of the application, you put your EIDL amount and then your SBA number. That's been, make sure you've got that because they're gonna do it. And then when the bank reviews your application, what's surprising to people is technically if you had a loan for like 60 grand, they're gonna come back and say, you got 60 grand approved for forgiveness. And then the EIDL advance won't get taken off until it goes to the SBA level. So when we calculate your potential forgiveness, we do the max forgiveness, and then the SBA then later takes it out and reduces that, and that's what's owed back plus interest.
Thanks, Tommy. The other thing I did want to mention is that grants, no problem. This is a quick comment. Even if you receive these Ohio grants, some people received Ohio grants, City of Lakewood grants. While the income's not taxable, technically the deductions you pay with those grants, wages, or buying a piece of equipment are also not deductible. So the income, not taxable, but just like with the PPP, the deductions are not deductible. Sorry, Derek, if you had something.
I was just going to add on to what Tommy brought up about potential amounts not being forgiven, creating the loan and that would need to be repaid. Just to remind people, the term for repaying whatever part of the loan is not forgiven is 2 years. And if it was then when Congress acted in early June, that got extended to 5 years. So if you have a loan after June 5th, I think the cutoff date was, then you got a 5-year repayment. But it was stated in that information back when Congress had that act go through called the Ppp Flexibility Act, that if borrowers who got loans previously had a 2-year repayment, they could negotiate with their borrowers or their lenders to extend that to the 5-year term that new borrowers were getting after June 5th. So there is some flexibility there, particularly if businesses have to pay back this EIDL grant that was given because it's reduced your PPP forgiveness.
One important planning opportunity that has come up as we're moving forward with, not only tax planning, but, financial statement planning is the impact on covenants for some of our clients that are in a that have fixed charge ratios and other financial statement covenants that they have to hit. We've seen it with discussions in various local lenders that how they're treating this other income, the PPP, forgiveness moving to the books as other income. There's different stances on how this is treated from a financial statement covenant purposes. So some are including it as a positive in your fixed charge ratio, and others are excluding it. So those that have concerns about where their covenants are coming out this year should really reach out to the lender now to know what their current stance is or what their anticipated stance is to start preparing where their covenant is going to fall. So it's something that's come up recently and throughout the last month for us, and something that we want to make those that do have that be aware of. So I know we're coming up closer to our hour here, so we want to make sure we're going to address as many questions as we can here at the end, and wrap things up timely as we get close to the noon lunch hour for everybody. So one question here, Eric, I'd like to get your perspective on this. It's a fiscal year and taxpayer 630. They received funds in May for their loan. It was forgiven in November. Do you recommend showing the loan as forgiven on the 630 tax return and matching the non-deductible expenses?
It's a very interesting question because I have a client who is a July year end, and we had something very similar. And it's not exactly clear. I think if you went by the letter of what the IRS came out and said, if you did a 24-week forgiveness application, technically, I think you should not deduct those expenses that were in June that you're using for forgiveness. I don't think you should deduct those. That's technically, but now in the real world, I think an argument can be made, and I think you'd have to discuss this with your tax preparer. I think an argument can be made that at June 30th, we didn't know that these expenses weren't going to be deductible. And that changed how you did year-end planning, that changed your operations in June. And I think you can maybe make an argument that that we will pick it up in the coming year. Again, I think that is a little bit of a gray area, but it's something that I think that is open for discussion with your tax preparer.
Question is the pros and cons of waiting until next year to apply for forgiveness. So really the pro is just, having more time to get your information together. If you're not comfortable of applying now, it gives you some time to wait and get more organized. The cons are just it's sitting out there. It's another thing on your plate that isn't squared away. Those that know that they're giving 100% forgiveness should move forward, submit their application. As Eric has said several times, is if you've incurred these expenses this year that will be considered non-deductible, you should be picking them up as non-deductible expenses. So we're encouraging clients to move forward at this point with the application process. Credits available for quarantined employees, continuation of pay. So Eric, do you want to address that real quick? It's really, I think the payroll tax credits that are available for those that have to stay away from work.
Yeah, so basically there's a payroll tax credit for, depending on how much the person made, I believe the amounts are like $500, anywhere from $200 to $511 a day of a credit you can get if your employee, you had under 500 employees and your employee had to be away from work because of quarantining or taking care of someone who was quarantining. So it is again, the point I want to make clear is don't use those. If you're going to seek these credits, don't use those wages while applying for your PPP.
Thanks, Eric. One more open question is if businesses have shown that we haven't used the PPP, is it essentially still essentially sitting in the operating cash account, knowing that there's still much unknown in future economic performance? Do you think it is reasonable to see forgiveness? So we have clients that are in a better spot today than they were before with their cash position. And so forgiveness is based on the payroll costs you incurred, the other qualified costs you incurred, not necessarily a decrease in your cash position. So forgiveness is based on those costs. And we have clients that their balance sheet is better today than it was pre-pandemic because of the infusion of the PPP. So yeah, you can still get forgiveness despite having a better cash position today than you did before. We're at noon here, so Eastern time. So we'll kind of wrap things up here. Appreciate everybody jumping on here this morning. As I said from the beginning, our coronavirus crisis team has been accessible throughout. We're accessible moving forward. Our process has been helping out our clients in all aspects of the PPP and planning opportunities. We've been addressing questions as they come up. We're prepared to review application forms, help you assemble your documentation, and ultimately submit your application with your lender. So in all aspects, we are available and willing to assist our clients, non-clients, and be a resource to answer any questions that may come up in a consultative manner. So as you can see on the screen there, we love requests to come in to our crisis team email as listed on the screen, and are open to help out anybody in any capacity we can in this topic area. So if any additional questions after this webinar come up, feel free to reach out to our crisis team, and we'd be happy to assist you. So I want to thank everybody that has joined, and as well as the panelists as well this morning. So
just one other thing to note as we're wrapping up, the presentation today was recorded. So everybody on the call, anyone who registered for the webinar, I will follow up with an email and a link to the recording.
thank you, Megan, and thanks again, everybody, for joining. And we hope you have a great rest of your day. Thank you.